following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday on market days. And thank you to John and Steve. Great couple of hours there. Let's see if we can keep that pace up. Most importantly, what's keeping the pace up here is that the Dow broke to a new all-time high. The S&P broke to a new all-time high. That's what I discussed with my subscribers, that there was a chance that we were about to break out for the first time in over 2 months, that there'd been a sideways consolidation. It allows for more room to the upside if, and I'm putting an emphasis on if, but my thinking here is that this really is a brand new leg B in the E-minis, trading right now down at 1 point at 21.25, having hit 21.34 this morning. Ooh, that's 9 points off the top. That's quite a bit. And most importantly, the weekly chart has gone to a leg E. You can see here in the 120-minute chart, this is a chart that I show my subscribers every day. We don't take positions in it, but I give the parameters, what we're looking at, why we're looking at it, which Chapman wave techniques we're looking at. Look at this. From the low that was made at 2,057, round number low, I was back around the 7th of May. The E-mini shot up in the 120-minute chart to peak C at 2113.50 and retested at 2113.50, a double top peak C1, C2 with a plus sign right there. That's like a down arrow. And it pulls back to where? It pulls back below the 200-period moving average to 2,092.25. Then it makes another peak, ABC. This time it goes to a nominal D, pulls back, starts a brand new ABC, goes to another D. And at 21.22, it pulls back, 21.22.75. Modest pullback within a little mini channel, breaks out decisively to the upside yesterday and goes to 21.34, the high of the day. Round number high. Now we're pulling back and we're inside this channel. Let me expand this. So if you're looking at Tiger TV, you can see all these different techniques. There's that arch formation that held beautifully in the uptrend line. The uptrend line became support, inside track, Chapman wave, inside track support zone. Testing it right now. It went right to the line of the inside track resistance line, the repellent line at peak D. Pulls back. Doji candle, silent doji, pulls back all the way to the low today of 21.24, another round number. But it looks like that because the MACD and stochastic are pulling back, and I've already got a down arrow, that we could have a little bit more of a digestion after some terrific moves to the upside. So this digestive phase is important. It's a part of what we track, part of what we expect within moves, especially when there's a change of trend. Most importantly, let me run the numbers. I'll keep this chart up right there, make it a little bit smaller. All right, there in the corner here, you've got your 120-minute chart. Not all the notations there, but we'll see as we move along. The Dow, INDU, had a spike earlier on, pulls back, has a spike earlier on, goes to 18,320. What is 18,320? It's just a fraction below the high of yesterday, which was 18,325.54. So we were under it by about 5 points, and still a very good-looking candle. The MACD's expanding. The stochastics at 95%. I have no choice but at this particular point to consider that there could be a pullback today, but that we are in leg B rather than F, and we'll see what happens at the end of the day. This is going to be quite important because we went to a nominal high of 18,288 week of the 16th of March. Nominal new high going to 18,325 yesterday. So that's an E/B. I'm calling it at this particular point, I believe it's an E. that we're getting closer and closer to that fourth wave down in Elliott wave. We'll talk about that over the coming week. But most importantly, we've broken out to the upside in I believe that's B. F/B in the daily chart, in the monthly chart, sorry. No. It's G/C. Let me just get this right, because I did not update it, and that's not good. Updating is very important, especially when you're moving month by month to modest new highs. Yes. So this is, I'm calling this C. It's so unlikely that this is going to be G. So we'll go F/B, and this is going to be C rather than G/C. Just at least for now, to make it so that you understand what I'm doing, I'll put a G/C. My thinking here is more like C/G. And that's really important. Why? Because it's above the 9-period moving average. We're close to, now we're past the middle of the month. The stochastic's at 85% below the 90s that it was in just a couple of months ago. And the MACD is a little bit negative, not very, but it's a little bit negative for the 9-period differential underneath the slow moving average. So let's just put that aside for the moment and say, as of now, the monthly chart is still acting very, very well price-wise. The weekly chart is acting very well because the stochastic's at 89%, MACD is positive, and the daily is very strong. Even if there's a pullback today, it would really have to take you underneath 18,120 for this to become more like a peak F top. All right? So let's go to the S&P. Those are the parameters we're looking at. The S&P, I'm going to do exactly the same thing. I'm going to call this an up move because the stochastic's at 90%. I'm calling this a leg. I'm going to just be very brave here. I'm going to go for a B right away. So we're at a potential peak B today if there's no new high above yesterday's high. And most importantly, I expect we will go to a C and a D over the period of this week, maybe into the following week. We'll see. But in the meantime, the S&P is in leg E. And the monthly chart is still continuing in G/C. So now the Dow and the S&P have caught up to one another. They're in the same leg to the upside notation in the Chapman wave. Let's go on. The QQQ series is down 9 cents at 109.97. I am calling this gray leg B, which means it's under the previous high of 111.16. I suspect we will make a leg D in the weekly chart to go to 111.17 or higher. That's what I'm thinking. And to continue leg G/C. Oh, they're all going to be in G/C. That's really important. So let's go to the New York Stock Exchange because that's the very broad New York Stock Exchange. I'm calling it again leg B in this particular instance. Hasn't broken to a new all-time high above the 11,248 level. Let me just type that in. 11,248. I've got it in the weekly chart, but not yet in the daily. And that says that there's a real good chance that we will go to a D in the weekly chart there as well and extend leg C. Oh, isn't this interesting in the monthly chart of the New York Stock Exchange? Let's go to IWM. IWM is a little bit behind. Now, that's the lagging indicator. And that's the indicator that's telling me not all is well, and that there's a real good chance that within 3 to 5 sessions, we might make some kind of a top here that finally sees a concerted effort to the downside. We'll see. That's just my thinking, and we'll have to deal with that. I had to change our view at the end of last week from bearish to moderately bullish just for now. And let's go to the TLT. TLT at this particular point has come off the low. It's in a leg F to the downside. They exceed the weekly chart, having made more than a 1-to-1 to the downside. Let me just show you something here. From 138.50 to the low that was made, that 138.50 was first week of January. No, the last week of January of this year. Comes down to 122.97 the week of the 6th of March, bounces up, and then makes a 1-to-1. This is the Chapman wave right here. This is a Chapman wave 1-to-1 extension, and it's missed it by so far 118.21, somewhere around there would be the level to go to. And today, we've gone to 118.13. So we either have done it or we're very close. I haven't got an exact measurement for it. I haven't got the time in now to do a mathematical calculation, but it's really close. But all I can say is, if that the TLT, the Lehman Treasury iShares, break to 100 if they close under 170, you can't rule out a test of the 200-day 114.50 moving average in the weekly chart. Very sharp leg D to the downside that we're looking at in the monthly chart. So let's go on. You got gold. Gold is pulling back. Remember, we're talking about for ages, we're talking about the commoditization of just about everything, and that was including interest rates. So I have to treat this as a very sharp counter trend rally at this particular point. I don't believe that the Fed is really done with at least trying their best from the sidelines to keep rates as low as possible. We'll see. A question in the den about the NYA, 4 time frames. I thought I just did that. Yeah, I did that. Let me just quickly do that again, NYA.X. Yeah, this is a monthly chart, is in leg C, and all it needs to do is to go to 11,249. And that will be a continuation of leg C. We've got all the little ducks in position, but look at the MACD. It is not that good. The stochastic actually is helping. I prefer to look at the MACD and say, that's the larger trend. And the larger trend is something that I am very observant. I keep an eye on that, because in the larger tide, when that tide is moving, if in fact what you do is get those little waves that go to shore and it looks like it's going to high tide, that could be just a transitory thing, because the larger tide is going to take turn the super tanker. You don't see super tankers turning. It takes a long time to say, oh, it was there. Oh, and now look, it's way over here. And that's how super tankers turn. And this is a super tanker. So the little speedboat that we see in some of the other smaller type of indices doesn't really apply here. So, okay, let's go to back to the gold. Gold made a peak D, the gold itself, not the GLD. I said in my report this morning, I didn't mean that. The GLD did, but it was gold itself. Went to a peak D in the daily chart, leg C in the weekly chart, still continuing those H patterns. I just don't see any way out. We have a gold stock, a very, very low price stock, and it's more kind of my thinking was, if gold was to continue higher right here, I'd rather have a smaller amount of money in a smaller stock that would have a nice percentage gain if it was to work, than to put too much money into gold, because there are other things that we're looking at that are acting way, way better. So we'll see if that's going to get stopped out. It's real close, but we'll see. It's just a small percentage, but a small percentage on a low price stock can actually add. So now I want to look at the dollar DXY. Dollar did have a very nice early move. It's continuing that move. Nice bounce. I'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So what we're looking at here is, I had a question in the dinner about Facebook. Facebook's holding well. To show some leadership in the whole sector, the kind of high-tech-ish favorite NASDAQ stock type action, you really need to see it's trading at 81.12, up 24 cents. It made a peak A, a single leg A up from the low of 77.46. No, that was the close. 76.79 on the 12th of May. It zipped right up to, on the 14th, it hit 81.85. Now it's trading at 81.13. No big deal. But to show leadership and some kind of focus for fund managers, you want to see it up in the 82. I think 82.80s, maybe 83, maybe even 83 level very soon. And what I questioned in the den, and what I said is, yeah, it needs to push into the 82.70s to the 83.50s by Thursday at the latest. And the reason is that it needs to show that it's got this V-shaped power to the upside to go and test peak C1 and C2. And the monthly chart is still very good because it's above the 9-period moving average, but it's starting to show signs of strain that it hasn't made it in the rectangle formation. In the 120-minute chart suggests that it's tested the 200-period moving average enough, it needs to break to the upside. And my bias right now is to see higher prices until we get some kind of a peak D or E in the Dow, and then we'll start going back to the short side. So that says that general market should go a little bit higher. Buyers are coming in, I suspect, on every pullback at this stage, and therefore you want to see leadership in something like a Facebook. Facebook needs not to break 79. I would say close below 79.50, and there's a problem because that's the 9-period moving average. You could get that pattern I call the single leg A up failure syndrome. Okay, now that's that, and then a question in the den is XLF. The XLF, which is trading at 25 right now, up 16 cents, is looking very strong. And just full disclosure, we are in my opening call, we are long, and we were hoping to add to the position. But so far, it's just it broke out to the upside with a gap up. That's a good sign. Now, there are a couple of questions that I'm going to get to. The question is, Basil, look at the XLF. Probably going to make leg C weekly, so it still needs to make leg D. Now, what I discussed with subscribers this morning is there's a pattern that I call the Chapman wave overlapping wave. And it's where you combine the letter, and I'll explain what it is now. Let me just open this up so you can see it nice and big. So let me finish the question. And then peak D. In sum, no reason to be bearish until we get a completion on XLF weekly, then goes on later to say, I got two questions. Let me get back to the okay. So here's what we're looking at. There's no other way that I could count this particular move that went from 21.55 the week of the 17th of October last year, that was that October 15th low bar, all the way to 25.14, peak A, and then a B. I had to call it because you can't get a G and an H. There is no such thing in the Chapman wave methodology. There is no H. So that says that peak F at 23.88 back in September, which pulled back very sharply to the 21.55 over 2.25 points, a 10% correction, pushed much higher, 20% in fact, from 21.55 to the 25.14 level, and 17% maybe, and then pull back. And it pulled back where to? It pulled back to the up channel support line, 22.89, the week of the 6th of February. And then underneath that previous peak B at 25.14 May, the week of the 2nd of January, it goes peak A, I call it gray A, and then a gray B, exactly the same pattern as before, and then it pulls back sideways, holds the 9-period exponential moving average. You know, this is a pattern that I talk about. It's kind of like a stork leg formation. I'm going to take it away because I think for me it's very distracting. There are too many other implications I don't want to have involved here. So what we're looking at is, make it simple, the XLF, the financial S&P Select Spider Fund, is independently, I said this morning that it might not be leadership, but it needs to show that it has independence. And in fact, it's now showing a little bit of leadership in the sense that as the market was pulling back, it refused to pull back. And right now, it's gone at this particular point, because it's gone above the 24.78 level of the 20th and 27th, the week of the 20th and 27th. This is the leg C, and I'll talk to you what could happen here for the overlapping wave combined leg D.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. Now the Dow's up 26 at 18,325. S&P is up $1.50 at 21.30. So I just quickly want to finish this and we go to our callers, but I wanted to show you. So once you go 1 penny above that peak B, the gray peak B, that starts leg C. My thinking here is that this leg C is liable to go above that peak B at 25.14, reactivates that B, and now you've got to combine. Think of it like confluence when you've got these two streams coming together. What happens very often is as they come together, it creates a very strong force, but then that force dissipates. And my suspicion here is that we're going to go to a D a little bit above the 25.14 level, maybe 25.35, maybe somewhere in that area, 25.25, 35. And then we've got to be careful, see if we'll go to maybe a C just a little above 25.14. But what it says is that a breakout in a Chapman wave overlapping wave takes you to a powerful leg D, powerful from the start, that is. And that means it's gone all the way from the 24s, maybe to the 25s. Well, it's already at 25 today, 25.01. But most importantly, it needs to overtake and overlap and reignite the previous original peak B. And usually this occurs at a C, but it also happens at Bs. If it's B, it's even more powerful because it says you should go to at least a D. Rule of thumb is once you complete D in the Chapman wave overlapping wave, watch out because you can come back and retest the lip, which would be 25.14. Hey, we're going to go straight to Brent in Martinez, California. Brent, how are you?
Good morning, Basil. Thanks for taking the call.
My pleasure. You'd like to look at
Oh, it's probably been about a week or so ago. We coincidentally were both looking in the same area at the fertilizer stocks.
Right.
I ended up going a little different route than you did, the one you had in your newsletter. I chose Mosaic,
Okay.
MOS. So I would like, if you could, to take a look at it and give me your analysis, please.
So I'm about to do it, but I need to know two things. One is, are you in both a long position and a call position on the options? And if you are, what month? Is it this? What month are you looking at?
Oh, I bought it a while ago when it was in the 44 range, and on this one I just have calls, and they're out to September.
Okay, that's what I wanted to know. Good, because I would treat it completely differently. Now you talk about calls. We have a fantastic show coming up with Kevin Hinks. This is the Think or Swim. It's the options hour coming up. So you might even want to refer to him about some other aspects in terms of the options. But let me do this. MOS is trading at 46.61, down 7 cents. The Mosaic Company phosphate potash supplier. The monthly chart now, for those of people who have been in this, looking at the market for a long time, you'll recall, I'm going to do this quickly in the monthly chart to show that it's gone to an A, B, C, peak D. It's done that a couple of times, but most importantly, if you were involved in the market at all, you will recall that potash, Mosaic, AGU, just a bunch of these guys back in the 2005 to 2006 period where China was buying, everybody was buying all these different things as well as copper. You remember we couldn't get enough copper. Then, of course, that was the period where here in Newton, Massachusetts, as is always the case, they decided to build a new school, a new high school, for just a mere, at the time it was going to be 130 million. It turned out to be on 200 million, with no contingency plan to say that instead of paying the highest price ever for copper, if copper was to fail, do we get some kind of a refund, a rebate, a something? No. They paid top dollar, and the building, of course, was completed in the Great Recession, as they like to call it, and they could have got huge. I mean, they could have got a huge discount, I'm sure, or at least a rebate at some point for the price of things as the building was being built. But it is a beautiful building, but it is more like a university than a high school. It's got just about everything. So now let's go back to Mosaic, because at this point, it's gone all the way from I meant to tell you the price. It's gone all the way from 163.25 the month of June of 2008, where it had a round number low of 124. That's always a tip off, because if you break that 124 level, that becomes immediately a major hurdle, and it could never ever break that. It did drop a little. It went from the 160s down to 39.75. Was that the low itself? I think it was even lower than that. It was lower than that. It went to, I remember, in the 20s. Yep, 21.94 in November of 2008. So it's made a 100% recovery from that level. And now what we're doing is looking at it after a peak D in the Chapman wave, which says be careful. It's had one of those sharp pullbacks. It's under the 9-period moving average, trying to test it in the monthly. Reason why I'm looking at the monthly is you are looking out. Now, the weekly chart is the one that really concerns me. It keeps making these scoops where it pulls back sharply, makes a V-shaped recovery, then gives it back up, makes a U-shaped recovery, then goes to a higher high, then gives it almost all of it back. Yep, all of it back. And now it's trying to, again, to make some kind of a rally. And the MACD is okay. The stochastic's not very good in the weekly chart. So let's do this. I'm looking at it. I got a chance at the moment to do a notation in the daily chart, but let's just do the notation in the shorter term. It made a low of 43.33 on the 30th of April. At that point, the 200-period moving average, this coral-colored thicker line, was just way above. It had nothing to do with the price, but as it went to peak A, gapped up to peak B, filled the gap, broke 1 penny above the peak B 45.67 level, started leg C, and leg C is in place right now because there was a doji candle yesterday at 46.77. Today it's gone to 46.81, but it's dipped a little bit. And what is it doing? And I love when you have certain key indicators. You remember, I like to talk about the Sears, the old-fashioned Sears and Roebuck toolbox that has all the tools, because you never know whether you're going to need a Phillips screwdriver or whether you're going to need a plumb line. And in this particular instance, we've got our toolbox out, and it says the 200-period exponential moving average is at 46.87. But the 200-period simple moving average right now is at, it's being covered, but I'll get it right, is at 46.34. So it's trading right in there, and it got repelled this morning, right at that level. And what's interesting is that the A, B, C, D. So the 120-minute chart also got repelled. But what I love is when you put all your tools together, look at the way Mosaic tested the breakout level in the 200-period moving average in the 120-minute chart at the low of the day of 46.23. That's the exact 200-period moving average support, and it's just bounced up very nicely and made a new recovery high. So here's what I'm thinking. I want you to see, in fact, how it handled the 200-period moving average, because looking at the chart, anyone can see that it was support, broke down, was very strong resistance, broke down, and now once again it's being tested. The way I'm looking at it with the stochastic, and I'm sure you're looking at it as well, stochastic at 96%, and the MACD still expanding. I'm suspecting that 45.81, the 9-period moving average, between that and 45.30 is going to be very good support. Today is really a very important, with gold pulling back like it is, the dollar moving up. This is showing it's independent as a commodity. It's in its own little orbit right now. That's what you want to see. I love the fact that you've got quite far out into September. I suspect that it's going to fail at some point, and that you will not need to have it so far out into September. And that also tells me that gains, because the premium really will only expand dramatically if this thing, you got it somewhere around in the 44-ish area, right?
Yes.
So I'm suggesting to you that the premium will expand a lot if this thing can get to the 47, between 47.20 and 47.35, you will see some of the best premium in the stock, because if it had to pull back after that, that premium would shrink, still hold quite well because you're so far out. But at the same time, that's probably where I would say to you, take something off. I wouldn't actually take anything off now in leg C. I'd wait for leg D. And if D, in fact, closes anywhere in the 47s, any spike into the mid 47s, I would say take a little bit off, because that's going to be your best premium probably for a week and a half. And then we'll see how it comes back to retest, because the monthly chart, this is the first time that the monthly chart has, since it broke down in February, the week of the 27th of February, is showing that it's trying to sit on that 9-period exponential moving average of 46.27 in the weekly chart. Now, if it can hold, even if it dips a little bit below, but by Friday, if it closes above that, that'll be the first sign to say you are seeing in the phosphate potassium area, especially with Mosaic, you're seeing the first sign that says, I'm going to try to have a counter trend rally that lasts not just 2-3 weeks, but 6 to 8 weeks. That's really the way I would like to look at this. And if in fact it holds well, that's kind of what I'd be looking at. And then all of a sudden, you've got this candle way back here, back in April, 47.56. If it starts to tackle that, then that whole candle, that ugly candle of March the 13th with a high of 49.48 and a low of 46.67, somewhere in the middle there, in the 48s, that would be my target for at least this move in the weekly chart. Then I think it starts to pull back. I hope that helps you.
It does, Basil. Great job. Great analysis.
I just wanted to say one thing, Brent. If it closes under 45, then it's going to make smaller little U shapes. But I still see the volume expansion from the bottom, giving it a lot of support. So that's why I'm looking out towards the month of. I'd go into June and July. Otherwise, I normally, I'd look at this much shorter term. Hope that helps. Thank you very much for calling.
Thanks, Basil.
My pleasure. Let's go to Larry in Cheyenne, Wyoming. Cheyenne.
Hi, Basil.
Am I going to do that again? Wyoming, Cheyenne.
Yeah,
Cheyenne,
well,
they are.
It's a good place to hide. I'm calling about AMPE, A-M-P-E.
Okay, AMPE. We've got it right here. This is
and the reason I can't do my analysis with your method is I don't know one thing. I don't know the meaning of that big gap down in terms of price and volume. Is that where huge money came in and wanted to accumulate it? And then
did we look at this before?
Yeah, you wanted me to call back in a week, but I wanted to wait for your patterns to get a little more mature, at least on the daily.
Yeah, so if I recall, Larry, what I'd say to you
on the monthly and C on the weekly, so there's potentially more room down, but on light volume. But what I can't analyze it because I don't know the meaning of that big gap down, and then buyers stepped in around the 2.5 area to stop the decline. So how do I use that information?
Okay, there are three things that I look at when I see a huge gap down. One is the following candle has to be either a slightly lower low and then a close above, or an inside bar, or an immediate break towards the gap, and it must go into the gap. In this case, it needed to go above 330. Folks, we're looking at MPO Pharmaceuticals, Inc., and with biotech companies, when you see a whopping pullback, now this is not a whopping pullback. This is probably one of the great collapses in a stock that happens just. It's not that frequent in biotechs that they completely break down like this. Very often it's just a big disappointment. So they gap down 15%, maybe 20%, and then they try to fill the gap because there's some sexiness to a biotech company that doesn't apply to high techs or anything else. But there's always hope.
Here's the rumor out there. The rumor is the study that was supporting the price run up prior to the gap breakdown, they contaminated the data, and it wasn't as definitive finding as they had hoped for, and that's the story. That's all I know.
Okay, so let me now look at it. I want you to look at it. The first time I see a gap down, a huge gap down, I look at it three ways. If it dips underneath the low bar of the day that it gapped down, if the following session it goes underneath and then closes inside, that's an okay sign that says I'm going to try to get to the top of the bar, not the gap, but the bar. If it has an inside bar, which this one did, and then the third session starts a move that takes it by the third or fourth session above the high that was made on that gap down, I love that because it says now I can at least attempt to do the filling of the gap. So you've got those three things. The worst case is when it tries to rally, fails completely, and then breaks the lower lows. So let me talk about it in that regard, other than the tests that I don't know about. So Larry, hold on, and we'll do a little analysis and see.
Many thanks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and we're looking at MP, AMPE, MPO Pharmaceuticals. Took a huge hit down. When a stock goes from the eights right down to the threes and then trades down to the twos without any rebound whatsoever, there's something in the story that is right there in the chart, and it's saying, be really careful. So, Larry, what I'm going to suggest to you is that I think I'd mentioned it before, that I would rather buy some strength than weakness, because the weakness can continue all the way down. The way the company looks right now, it could go insolvent. If they don't have enough money out there, they can go insolvent. So what I'm going to suggest to you, whatever you put in should be, I don't like to talk about it as if it's play money, but it should be money that you're prepared to see sit there for a long time because it doesn't work. That's number one. Number two is, I would wait for a sign of strength that says it's able to break into the it's at 220. It can hold the 260 no, I'd even want 280. If it goes to 280 and then pulls back just a little bit, the moment it took out the high, that 280 high, I would put a little bit of money to work there, because that could start a couple of legs to the upside. It's a long way to go just to test the breakdown level of $3.30. But look at that. That would give you an opportunity to make a good percentage on that stock. And if it started to repair itself, you're in the position. But I would not put too much money into it, because the way it looks right now, You probably know a lot more about it than I do, but visually, this doesn't have what normally happens after many of the biotechs come out with some disappointment because they correct the disappointment and then they put it back into phase 3 or whatever it is. This one looks like they were not expecting it and they got a real problem. I hope that helps you, Larry. I'd hold off. Let's look at it maybe in a week's time and see what happens.
Many thanks. Thank you.
Thank you very much for calling. Thank you for bringing it to our attention. So, folks, before you go to Kevin, and don't forget, we have the options programs on Thinkorswim are absolutely just a treat, a visual and an oral treat, because they come up with ideas that us lay folks in options don't necessarily. I do naked options, so I'm always intrigued by the thought process. Now, let's just do this. I want to make it real simple. The VIX index has, in fact, gone below the 1280s. It's now at 1266. As it stands at this particular point, the failure of the last 3 days, I'd say even the last 4 days, is suggesting to me that, at least in the short term, selling pressure is being maintained, and you can see how the Dow keeps coming back. And in our portfolio for my opening call, we are biased now to the long side, or at least trying to get more to the long side, at least for the shorter term, until we get that leg D or E in the Dow, and then we'll have to make some decisions. But I like the fact that UTX is acting well. My Dow Quartet, GE is okay. It's not great, but at least UTX is doing something not bad. So my bias is a little bit at this point more towards the long side, and we'll see what happens. But most importantly, if the VIX goes, stays underneath 1270, and especially if it goes by the end of the day, if instead of having a little bit of a bounce, it goes to the 1240s, that's going to suggest that the upside bias, let me just go to the Dow because we're always following the Dow, right here, INDU. The Dow is in probably leg B and has a little bit of a pullback to come to make a peak B. 1 penny below the leg B starts peak B. Then you take that out by 1 penny, even though it's an $18,310 stock price. You take it out by 1 penny, you start leg C. And then we can go to D. And you don't have to have legs C and D all alternating day by day. They can go for a couple of days. And the way the weekly chart is forming right now, the MACD is finally crossed positive, and the stochastic is at 89%. So I'd be careful about being short. My bias is towards the long side, but there are certain stocks that certainly do look like they're going to be great short. I'll be back later in the day to do one of the hours of...
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.